Disclaimer, this podcast is not investment advice. This is purely for entertainment purposes and represents solely our own opinions. Please do your research before you make any investment decision. All right, welcome to our first Think Like an Investor Thursday. I'm super excited for this episode because when Whitney and I talked about, what are we going to discuss with Thinking Like an Investor, she actually made some really strong discernments that I didn't even think of myself. When you think of investor, you think of Wolf on Wall Street, and she explained to me that's actually not the proper definition of an investor. So Whitney, I will let you take the floor.
Okay, so I can't take full credit for discerning the difference between the different types of characters, shall we say, that come into the broad umbrella that has become investing. Part of this has come from working with my dad, and then part of this has also come from the book The Intelligent Investor, which I highly recommend. It's a great intro to learning about investing.
We'll link to that in the show notes.
Yeah, so the four distinctions I want to make are between an investor, a speculator, a trader, and a predator. Okay, so when I first started working with my dad, I was like, oh, an investor covers a lot of things, right? You have to invest, you're trading, but actually those are two very different mindsets. The investor mindset is a long-term mindset, and it's a mindset that is very data driven. Like we've talked about in some of the earlier episodes this week, it has to do with looking at the big picture. What are your resources? What is your risk? What is your potential return on investment? And making an educated decision. And very often, an investment is a long-term play. A trader, more often, is short and quick. That's why they're called day traders. So, as an investor, you can also be a trader and vice versa. But the mindset of a trader, they're using different levers than an investor probably is. Um, and then two of the kind of more nuanced ones, a speculator is someone who often masquerades as an investor. Um, but basically a speculator, they're not doing their research. They're usually just buying into whatever the hype is. And then a predator is someone who, again, they don't necessarily care about the company they're investing in. They are purely focused on making themselves money. And they're going to prey on other people and other situations in order to get ahead for themselves. And so we'll go into some examples of these.
Yeah, so I know I already talked about Warren Buffett on Wednesday, but I'm just obsessed with him, and I think everyone should be if you look at the returns he's had historically throughout the years. But he really is the true epitome of an investor, right? He is focused on what is the long-term value of the stock that he's investing in. And I really just love that because I think when you see all these day traders, it gets intimidating, right? Where you're like, oh, I have to be watching the market every single day. I have to be dialed in. I need to have Bloomberg's like $6,000 terminal. It's like, no, like you need to have a strong grasp of the industry you're investing in and look at that long-term value that it's creating, right?
Exactly. Yeah. Traders are more focused on short term gains. And to be quite honest, it's very hard to be a successful day trader and to make money as a day trader. You have to be very knowledgeable about the different types of financial instruments that you can use. You have to, people like to say that they know how to game the system, but there's very few individuals that know how to do that. And quite honestly, the system is built against individuals. It's built for big financial institutions and, big banks, big hedge funds. Another great book that's on my dad's reading list is called Dark Pools. Again, we can link it. But that book talks all about, basically the pipes that get used in the financial system and how, there's just you can't outwit it
Yeah, they're all,
basically.
well, I think on that note, you look at they have everyone's like, oh, well, they have bots doing everything now. Those bots are doing more day trading because at the end of the day, if you invest in a company that's going to increase in value over time, it doesn't matter what the bots are doing. That stock is going to go up because they're going to continue posting improved like financials, right? So when people get scared of bots and this like these bigger banks, a lot of times they're more so referencing to day trading.
Exactly. And versus the investor mindset, you are thinking longer term, you're counting more on the quality of the company versus, a quick return on a short trade. Um, and the investor mindset anyone can develop, I think is the best aspect of the investor mindset, right? Like you would have to spend a lot of time and probably money learning how to be a successful day trader. And like I said, there's a ton of programs which fall under the predator category that ostensibly will teach you how to be a good day trader, but at the end of the day, they're just taking your money. They're not going to teach you how to be successful because if if they were making a lot of money doing that, they wouldn't be bothering to teach other people how to do it. They would just be making a lot of money,
Yeah.
right?
We could go
So,
down a rabbit hole of the companies that do that for sure.
yeah, exactly. And another example of now kind of switching gears to the predator category, um, like Wolf of Wall Street, a lot of people view Jordan Belfort as an investor. And, he may be an investor now. I can't really speak to that. But at the time that he is most famous for, right, his days on Wall Street, he was not an investor. He was a predator. He was preying on individuals, getting them to buy into penny stocks, and then he was the only one making money in that situation. He was not an investor. He didn't care about the quality of the companies that, he was IPOing or investing in. He just cared, can I make a quick buck?
I
So,
love I love that you said he didn't care because I think that's the thing too is when we say, "Oh, I'm going to invest time in someone," it's because I care about them. Like I think you should also be caring about what you're investing your money in, right? Like, I love the quote, you vote with your dollar every day. And the cool thing is if you support like I don't know, I love that you invest in biotech, Whitney, and some of the technologies you've told me about. I'm like, wow, I would love for that to exist in the world, right? Like this would be transformative for so many people with a certain health issue. Like investing is caring about the world you want to live in and putting contributions to the companies that support it.
right, exactly. And that's actually a way that you can suss out a predator, right? Is how much does that individual or that company care about your success, right? So if you get approached about, oh, we have this great training program that's going to teach you how to be a good day trader, well, like ask for hard results, right? Say, okay, great. Like, can I talk to some of your past clients about like how successful have they been as a day trader?
Well, and beyond just talking to past clients, know the success rate, right? Because like everyone's gonna like if you like play the lottery, everyone's gonna win at some point, right? Like you want to look at the rate of success as
Right.
well. But that I think that almost gets into the speculator space now when we start talking about these training programs, is like it's so fascinating to see all these meme stocks and just how people get a hype around something and they don't even know what they're doing or what they're putting their money in, right?
Right. And I think with the meme stocks, what's interesting is there were true investors who were invested in the meme stocks before the hype happened, right? They had a logic, they had a reasoning, they had a thesis, they had an exit strategy that, where they were planning, okay, when the company hits this point, this is when I exit. So there were true investors invested in those meme stocks. But then when the hype started happening and, there was all the hubbub on Reddit and whatnot, that's when the speculators started coming in. They didn't know anything about the company, right? They were just buying into the hype of, take it to the moon and we're going to stick it to, the big guys. And the irony in that is there actually were some big investors who made a lot of money because they were able to exit at an unexpected point just off of the hype alone.
Well, Well, and that kind of leads into it's funny because that's actually how the Great Depression happened is everyone started putting their money into stocks that didn't make sense to put money into, right? And they got overvalued and then the market collapsed. And I think that people maybe don't realize the whole point of investing, you don't want to go into anything that's overvalued. And if, everyone and their mom is talking about it, don't invest in it. And not to keep going into Warren Buffett. I feel like I'm going to talk about him all the time. I love that he's like, I don't invest in what I don't know. And I remember when NFTs came out, people were making just like crazy returns. And I was like, I work in tech, like I should be intrigued by this. But I was like, I don't understand the fundamental value of these NFTs, right? And I didn't understand it, so I was like, I'm not going to touch it. And then it's like they're like so fun that now the memes are not about investing in NFTs; they're in like making fun of like these people that put thousands into something that's worth like nothing now, right?
Exactly. Yeah. It's like you approach that with an investor mindset, right? You're like, I don't find this interesting. The research I've done, there's not an investment case here from my point of view. Don't buy into the hype. And yeah, absolutely. My dad and I always joke that if your dentist or your taxi cab driver is talking about a stock, probably not the time to buy, it's the time to sell because if everyone and their mom is talking about it, it's overhyped, just period.
Yeah.
And
I
and and to be fair, oh, go ahead.
I would asterisk that with unless maybe that taxi driver was like one of the first people in Ubers and he's like investing in Uber and he's like this guy's going to eat my lunch, right? So I would say like it might be that it's specific. It's more when the whole general population is building into the
Yes.
hype.
Yeah, yeah, touche. Yes. No, again, like do your research, right? If your cab driver is talking about a hot stock, maybe inquire further about, oh, do you know someone or do you work there on, your free time and whatnot. But the other thing too is that investors do fall prey to hype and to speculation. I mean, I can't tell you how many conferences I've been at where we're in an event in an investor exchange, and in those types of things usually everybody in the room will share, oh, I thought this company was really interesting, or this is the one I'm focused on and here's why. And I mean, the most recent conference I went to a couple months ago, they picked the AI company. And I haven't checked up on that particular company recently, but to be quite honest, there's not a lot of AI companies, especially micro and small cap AI companies, that are worth investing in. And the fact alone that everybody was saying it's this AI company, I was like, probably missed the boat on that, right? Like it might have been a good investment a year ago before anybody was buying into the hype, but today it's probably overvalued. So.
Yeah, and when it comes to assessing over undervalued, that's when you want to start getting into like revenue and profit multiples, which we should definitely save for another episode in terms of like how do you under like is something under or overvalued, right? So on that note, I think we've beaten this to death. I think that was a really great run through though of all the different types of what I, up until, a few days ago when Whitney and I discussed this, thought encompassed an investor. And hopefully you all can think about looking at investment from an actual investor mindset instead of maybe some of these other roles that you've seen that have been historically confused with that.
So join us tomorrow for Fundamental Fridays, and we'll talk about how to apply this week's lessons to your own life.